We are looking at a Euro 15-minute chart, and I just want to give you a bit of an idea as to what can happen when a key economic or market moving economic report is about to come out. We had some European, some Eurozone data come out here as we saw whiplash, and then price just sort of settled in prior to the CPI, the Consumer Price Index coming out at 8:30 a.m. U.S. Eastern Standard Time. And the Consumer Price Index is a measure of the average price level of a fixed basket of goods and services purchased by consumers. The monthly changes in the CPI represent the rate of inflation effectively. So in this particular occasion, the consensus forecast was a 0.4% increase, and as a result, what happened was we see price responded to the report at exactly the time of the economic report. What happens here is that liquidity dries up at the time of the report because there's very little interest in making transactions in the market. And then when liquidity starts to pick up, there's a great deal of volatility because price needs to settle in and take in the information and adjust the price according to what the perceived new value is based on this new piece of information. In this particular case, now just bear with me while I kind of walk through what happened on this day. The CPI report really showed that there was a very strong potential that the Fed will raise interest rates at this month's FOMC because of the Consumer Price Index, which is a reflection of inflation. Now, the overall consumer price inflation rose 0.4% in May, following a 0.6% jump in April. The market consensus had expected a 0.4% increase, and again, the inflation at the consumer price level is running much stronger than at the producer level. Notably, the CPI showed continued pressure at the core level, rising 0.3% in May, following a 0.3% boost in April. Core inflation has been 0.3% for 3 months in a row, and the consensus had expected 0.2% rise in core CPI. So that's kind of a basic summary of the growth that is happening in the U.S. zone. See if there's any other points to note here. The overall CPI's year-on-year growth rate is now 4.2%, which is significant. Now, what happened on this occasion was price responded to the report like this, and it's important to watch these lows here in every case in an economic report. But unless you have a long-running position with a lot of cushion, a lot of profit cushion, you want to be careful and stand aside from some of these major economic reports. Now, what happened here was you see this response in price like this was, it's interesting because quite often these types of reactions will move on a technical level very, very soundly, and as it corresponds with geopolitical or economic data that is coming into the market. Now, at this point right here, some information came into the news feed that China was likely to revalue their currency sooner than later. And the verbiage that was used in this data release caused the US dollar to fall because that is weak for the dollar as it depegs its currency. That is a negative for the dollar. So here we see the euro rally over 100 pips within 30 minutes. So creating a strong counter reaction to the move that was pricing in the potential interest rate hikes as a result of increased inflation.